1. How the Big Beautiful Bill Changes Your Social Security Taxes in 2025. 2. Understanding the new $6,000 senior deduction. Ask the editor. 3. Understanding taxes on Social Security benefits. The truth revealed. 1. How the Big Beautiful Bill Changes Your Social Security Taxes in 2025. Taxes can be a constant worry for seniors living on fixed incomes, but what if a new law promised to ease that burden? Enter the Big Beautiful Bill, recently signed into law, which promises significant tax relief for Social Security recipients. But here's the catch. Not everyone will qualify equally, and the changes come with a ticking clock. Let's break down what this means for your benefits. A viewer, Bob L., recently questioned whether an email from the Social Security Administration, SSA, about tax relief under the new law was legitimate. Rest assured, the SSA confirmed on July 3, 2025, that the communication is authentic, not a scam, and we've verified the details for you. The core change: a new tax deduction. The bill offers seniors a potentially game-changing tax break, an additional deduction of up to $6,000 for individuals 65 plus and $12,000 for couples. This deduction applies to all income types, including Social Security benefits, pensions, and investments. The goal? Reduce the federal income tax seniors owe. But there's a catch: phase-outs. The deduction starts disappearing for singles earning over $75,000 annually and vanishes completely at $175,000. For couples, it phases out above $250,000. Example: a retired couple with $200,000 in income from pensions, investments, and Social Security might only qualify for a partial deduction. How does this impact your monthly checks? The law doesn't change your Social Security benefit amount, but it could reduce how much tax is withheld from your monthly payments. If you expect to owe less tax, you'll need to manually adjust your withholding settings with the SSA or IRS to avoid surprises at tax time. The fine print: temporary relief. This deduction kicks in for the 2025 tax year but expires in 2028 unless Congress extends it. Critics argue this creates uncertainty for long-term planning. As one financial advisor noted, temporary tax breaks are helpful, but seniors need predictability. Controversy alert: is it fair that higher-income seniors face stricter phase-outs? Proponents say it targets relief to those who need it most, while critics argue the thresholds are too low and could inadvertently hurt middle-class retirees with non-taxable income, e.g., tax-free municipal bonds. Your turn. Should tax relief for seniors be permanent, or are temporary measures enough? Do the phase-outs unfairly penalize retirees with hidden income sources? Share your thoughts in the comments. 2. Understanding the new $6,000 senior deduction. Ask the editor. Imagine getting a $6,000 deduction on your taxes just because you're 65 or older. Sounds too good to be true, right? But here's the thing: it's not entirely true. The newly enacted One Big Beautiful Bill, OBBB, doesn't make Social Security benefits fully tax-free, as many had hoped. However, it does offer a new senior tax deduction of $6,000 per filer age 65 and older. But here's where it gets controversial. Not everyone will qualify, and the deduction comes with some significant phase-outs. Let's dive into the details and explore what this means for you. Every week, in our Ask the Editor series, Joy Taylor, the Kiplinger tax letter editor, answers questions on topics submitted by readers. This week, she's tackling questions on the new $6,000 deduction for taxpayers 65 and older. One question on everyone's mind is whether the OBBB eliminates federal income tax on Social Security benefits. The answer is no, it doesn't. Many Social Security recipients still pay federal income tax on up to 85% of their benefits, depending on their provisional income. President Trump had promised to end this tax, but the process used to pass the OBBB didn't allow for this change. Instead, lawmakers found an alternative means of tax relief for seniors in the form of the new $6,000 senior deduction. This deduction is available to taxpayers who claim the standard deduction and to those who itemize on Schedule A of the Form 1040 or 1040 SR. It's a temporary deduction, first taking effect on 2025 tax returns and ending after 2028. Married couples with both spouses 65 and older can deduct $12,000 on a joint return. But here's the catch. The deduction begins to phase out at modified adjusted gross incomes, or modified AGIs, above $150,000 on joint returns and $75,000 on single and head of household returns. The deduction is fully phased out once modified AGI reaches $175,000 for single and head of household filers and $250,000 for joint filers. And this is the part most people miss. Each eligible spouse must have a Social Security number to claim this write-off. Now, you might be wondering if you can take the $6,000 senior deduction even if you itemize on Schedule A. The answer is yes, you can. The deduction is available to both taxpayers who claim the standard deduction and those who itemize. The IRS will likely add a new line to the 2025 Form 1040 to account for this deduction. Another question that's come up is whether filers 65 and older who don't receive Social Security benefits can still claim the $6,000 senior deduction. The answer is yes, they can. You don't have to receive Social Security benefits to take the deduction. For example, if you're a retired federal employee receiving a civil service retirement system pension, you can still claim the deduction. Finally, let's talk about modified adjusted gross income, or modified AGI. This is a term used by the IRS to determine your eligibility for certain tax benefits or tax breaks. To calculate modified AGI for purposes of the income threshold for taking the $6,000 senior deduction, you start with your adjusted gross income on line 11 of your Form 1040 and add any foreign earned income exclusion, foreign housing exclusion, and any amounts excluded from gross income because they were received from sources in Puerto Rico or American Samoa. So, what does this all mean for you? Will you qualify for the new $6,000 senior deduction? Do you think this deduction is a good alternative to making Social Security benefits tax-free? Let us know in the comments. And if you have more questions about the OBBB or the new senior deduction, don't hesitate to ask. We'll be answering more questions on the OBBB in future Ask the Editor roundups. Subscribe to Kiplinger's Personal Finance to stay up to date on the latest tax news and advice. And sign up for our free e-newsletters to get expert advice on investing, taxes, retirement, and more delivered straight to your inbox. 3. Understanding taxes on Social Security benefits. The truth revealed. Despite the widespread belief that taxes on Social Security benefits have been abolished, the reality is quite different. The recent tax legislation does not include any measures that render Social Security benefits tax-exempt. Federal taxation of Social Security benefits commenced in 1984 as a means to bolster the Social Security Trust Fund, which was on the brink of insolvency. A complex array of regulations concerning age and income may prevent some retirees from benefiting from the newly introduced senior bonus deduction. The misleading chatter surrounding Social Security and tax reductions for seniors, encapsulated in what has been dubbed one big, beautiful bill, is likely to lead to a series of unfortunate surprises at tax preparation offices in the coming year. Many uninformed retirees are bound to be taken aback when they file their 2025 tax returns, asking, "What do you mean I have to pay taxes on my Social Security benefits?" In July, I came across social media posts from tax professionals expressing their dread for the moment they will have to confront clients with the harsh truth. Yes, your Social Security is still 85% taxable. I know that's what Trump keeps claiming, but focus on what he signed, not just his words, exclaimed Adam Markowitz, a tax agent from Florida, in a post on X. #, the source of confusion for retirees regarding taxes. On July 4th, the White House reiterated its claim of no tax on Social Security when President Donald Trump signed what he refers to as the One Big Beautiful Bill into law. However, this statement is misleading. A mass email sent on July 12th reiterated the same point. The Social Security Administration also sent out an enthusiastic email on July 4th to millions of Social Security beneficiaries and others, which left some retirees bewildered by the agency's aggressive promotion of supposed benefits, further complicating the situation. The email claimed, The bill guarantees that nearly 90% of Social Security beneficiaries will no longer be liable for federal income taxes on their benefits, offering significant and immediate relief to seniors who have dedicated their lives to contributing to our economy. 90%? More on that later. At one point, the email implied that retirees would receive 2 tax breaks. The new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples. Additionally, it offers an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can retain more of their hard-earned money, stated a forwarded copy of the email. But wait, there is no additionally. The tax cut is solely an enhanced deduction for those aged 65 and older. The law does not eliminate the possibility that some retirees will still owe taxes on their Social Security benefits. The Social Security blog has since issued a correction without clarifying the original error. Correction notice: this blog was updated on July 7, 2025. The second sentence of the 4th paragraph originally stated, "Additionally, it provides an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can keep more of what they have earned." The term "additionally" has been removed from the text. Now, the paragraph on the SSA.gov blog reads, "The new law includes a provision that eliminates federal income taxes on Social Security benefits for most beneficiaries, providing relief to individuals and couples." It achieves this by offering an enhanced deduction for taxpayers aged 65 and older, ensuring that retirees can retain more of what they earned. Clear as mud, as one of my relatives might say. #, understanding the senior bonus. A new, temporary senior bonus deduction of up to $6,000 will be available to taxpayers aged 65 and older for the years 2025 through 2028, after which it will expire, unless Congress takes action. Tax experts refer to this as a special personal exemption, designed to lower the tax burden for many seniors. Generally, seniors with higher incomes will not qualify, and those with lower incomes who do not owe taxes will not benefit either. Since it is a deduction and not a refundable credit, it will not assist seniors who already do not owe income taxes, explained Mark Luscombe, a principal analyst for Wolters Kluwer Tax and Accounting in Riverwoods, Illinois. Luscombe further clarified that higher-income seniors will see a reduced tax benefit or none at all, as the deduction begins to phase out for individuals with a modified adjusted gross income of $75,000 for singles and $150,000 for joint filers. Interestingly, you do not need to be receiving Social Security benefits monthly to qualify for this deduction. Being younger does not help either, regardless of income. Taxpayers aged 62, 63, and 64 at the end of a tax year will not qualify for the senior bonus deduction. They may still owe income taxes on their Social Security benefits if they are receiving them and meet certain income thresholds, without any offsetting bonus deduction. Here's a summary of additional rules to keep in mind when filing your 2025 return. * married couples may benefit more * if both spouses are 65 or older. Each could claim up to $6,000, totaling $12,000 for the senior bonus deduction in a given tax year. * filing status matters. * married couples must file jointly to claim the senior deduction. Choosing married filing separately disqualifies you from the senior bonus deduction, according to Tom O'Sabin, an enrolled agent and Director of Tax Content and Government Relations for the National Association of Tax Professionals. * Social Security number required. * to claim the deduction, seniors must possess a valid Social Security number. * income limits apply. * the tax break phases out entirely for single taxpayers aged 65 and older with a modified adjusted gross income of $175,000, and for married taxpayers aged 65 and older with a modified adjusted gross income of $250,000. * 6% phase-out rate. * as income exceeds the threshold, the deduction phases out at a rate of 6%. The National Association of Tax Professionals, which has 23,000 members, provided an example of a 70-year-old retiree who is single with a modified adjusted gross income, MAGI, of $90,000. In this scenario, $15,000 of MAGI exceeds the $75,000 threshold for a single tax filer. Using a calculator, multiply $15,000 by 6% to arrive at $900. Thus, the maximum $6,000 senior bonus deduction is reduced by $900, resulting in a senior deduction of $5,100. Hashtag taxes on Social Security have not been abolished. Let me be clear, insisting that there are no taxes on Social Security benefits is not doing your friends any favors. Some individuals still need to withhold taxes on their Social Security benefits if they have other significant income sources. At no point did the House or Senate versions of the bill, which was later passed and signed into law by Trump, include any provision to eliminate taxes on Social Security or provide a deduction for Social Security income, according to a summary of the extensive reconciliation bill provided by Wolters Kluwer, an information services company. Trump famously suggested making Social Security income tax-free during his 2024 campaign. However, such a change could not be included in the budget reconciliation process. One provision of the Congressional Budget Act of 1974 prohibits Senate reconciliation bills from including any measures that alter Social Security benefits or taxes. It's reasonable to view this new deduction as an effort to align with the spirit of the president's campaign promise while adhering to the constraints of the reconciliation process, stated Garrett Watson, Director of Policy Analysis at the Nonpartisan Tax Foundation. However, marketing this as exempting Social Security from income tax is misleading and will confuse or frustrate seniors who end up paying taxes on some benefits, Watson added. The senior bonus deduction, Watson emphasizes, applies to any taxable income source that a taxpayer age 65 or older possesses and may not necessarily eliminate all taxes on Social Security benefits. Federal taxation of Social Security benefits began in 1984 to support the Social Security Trust Fund, which was facing insolvency. At best, the new tax break means many seniors will see some tax savings over the next 4 years. Despite the SSA's claims, most individuals will see their income taxes on Social Security benefits reduced, not completely eliminated, wrote Howard Gleckman, a senior fellow at the Urban Brookings Tax Policy Center. In a report published online on July 9, Gleckman noted that the primary beneficiaries are seniors earning between $80,000 and $130,000. For this group, the senior bonus deduction would yield an average tax cut of about $1,100, or roughly 1% of their after-tax income. The tax deduction of up to $6,000 is expected to